What is up, everybody? It is Ted here with some bodies and wicks. I just tried doing the live thing, and I, I can never do it. I was able to do it for like the longest time, and now I can't do it. It's like it kicked me out after two something minutes. I honestly thought it was actually working because it actually stopped the whole gave me you're not receiving enough video to maintain good quality, and then that went away and it said everything was excellent. So then I stopped paying attention to it after that, and I went through almost the whole video before I went back to it, and I realized it cut me off after like a minute and 53 seconds. So I do apologize about that. So I'll try to get through this one as much as possible, as quickly as possible, I should say. Ted here with Bodies and Wicks. This is a smart money channel explaining crypto. Smart money is generally used to explain more of the Forex conditions, but it does apply to every single asset out there. And the reason it applies to every single asset out there is because it's ran by an algorithm, right? Everything's ran by an algorithm. No matter how much you want to believe it or not, it's the truth. So everything that you've been taught in the retail world, hold on one second. Such as trading off trend lines, or that there is this channel, that it's gonna follow forever, or there's these shapes, geometrical shapes you can trade off of, like a triangle or a bear flag or a bull flag, or a pennant, or something of that nature, or harmonics. Like you can make up this thing called like a crab, or the crab eating a shark and on an eagle's nest or something, and you can trade off that. Like, okay, so in smart money, none of that is just even fathomable. Like, that is not what price does. In the algorithm of smart money, price looks to do two things, and it looks to look for liquidity, and it looks to balance. And that's the two things. And along the way, there are things within the algorithm that you'll find, and that you will see, and that you'll notice, and I'll try to point them out to you. And that way, maybe you can do your own studies or find other actual good um, smart money teachers. I was watching a smart money video earlier, and it made me so mad because the guy he had some of the concepts right, but he just had everything. He had the vocabulary wrong. He had everything wrong, and it was just like, what is this guy talking about? And I hate to call him out, but I mean, I tell everybody what the channel is so they don't think this guy is who is what smart money is. And it was called Smart Money Source. And I was kind of appalled at what he was teaching, because, like I said, he had some of the concepts right, and he actually had most of the concepts right, but his vocabulary was wrong, and he was it was just too overboard. Everything could have been said a lot simpler, in a lot simpler ways, and it was it's really not that complicated, and it seemed like he tried to make it as complicated almost as possible. Um, and I was like, well, okay, never mind. But anyways, we are doing Solana today, right? So we're gonna do Solana as a as on the quick technical analysis series. So I'm gonna try to get through this as quickly as possible. And we're gonna be doing it the smart money style. So why don't we just why don't I just shut up and just go straight over to the charts so we can get this going. And make sure we have some sexy music going on for you guys. And there we go. All right, so this is what we're eventually going to get into. As you can see, I am in the 5-minute chart on this. So we're not going to get there just yet. We got to start from the very beginning like I do for most of mine. We're going to go all the way back to the very beginning by going to the monthly chart, right? So, I want to know what's going on with Solana because I am also heavily invested in this one. I love this coin. I think it's going to, there's a lot of fundamentals to it that could really change crypto, and I think Solana is going to be something, it's going to be one of those things. It could turn into file coin. It could just shoot up to $160 in no time. All right, we start from the very beginning. As you can see, I mean, it was a brand new coin back in August, and it wasn't too long after that. It caught the wave. I was talking about this earlier about depending on the currency, it could be almost like an overinflation of the wave. Especially seeing something like, especially if people were trading the pound. The pound had been and still is going nuts. The pound is just like its value is just going up and up and up. The euro, not so much. I mean, it is going up, but it's kind of still range bound. The dollar is at a fairly decent low, but it's still range bound. Has been range bound since December. But March contracts, long gone. June contracts just now starting, so we might see a shift. You would have to look at high time frames historically to see what could possibly happen with the dollar, the euro, and the pound, and see the kind of trading volume is happening in those places to see what could lead to higher prices in certain things. So like I said, sometimes those things can be considered either like a hidden tax or like a hidden inflation, just because of the way that they are, what the dollar is worth, what the euro is worth, what the yen is worth, certain things like that, and how much trading is going on in certain countries, and that could turn these things into something that they're either they could be overvalued or they could be undervalued. It just depends. So that's one thing I wanted to bring up. Another thing is, especially with the monthly, the first thing you find here is fair value gap right at the very opening as soon as it's starting to make its big push up. The high here is 1190. I think we've already been way too high and come down again. I think the lowest we got was 19. I really don't think we're gonna make it down to 1190 again. If we do, it's probably in the very far distant future and a very bad crash. But that's the only thing I could think of for it coming all the way back down to 1190. So now that we're done with the month, let's go with the week. One of the things I was trying to tell you about was how the guy was using bad vocabulary, and I teach you guys about fair value gaps all the time. He was calling those liquidity voids. I actually just want to show you, in case you ever watch this guy's channel, what a liquidity void actually is. So I'm going to the British pound versus the US dollar. This is what a liquidity void actually is. I have it circled out right here. It's when the two bodies of the candles don't touch. You usually see it in more like minute charts or like weekly charts, when a new week starts in Forex. The bodies don't usually touch. There's usually a gap at the opening, something like that, but it usually fills in. Consider it filling out some wick. Later on, that will be, it'll come back and fill up, and as you can see, it balanced out between these two. So here you had, before the drop, you still had the green candle, but it did come low enough where now it's the third big candle across the big drop came up high enough that it balanced out that candle. So there's no fair value gap in there whatsoever. So this is all balanced. Everything is balanced going up here. So that was what's going on with the weekly and the daily. You can see these are still some of the weeklies. Here is a daily one that I found. I should probably make the style a little bit different just so differentiate it from the weekly. There we go. So there's the daily fair value gap. Comes over again, punches through, and then pushes back out. And then when it comes back down, it just goes right through it. Why? Because it's already been balanced. Even though the algorithm does remember those areas, it could have bounced off of it easily one more time, but this time it just ran right through. So then it pops out, and we move on up a little bit, gets up to here, and I'm not exactly for sure. This is one of these things I couldn't tell you why it stopped here. I would probably have to get down to a lower time frame and look over here at this area to tell you why it's not there. But I'm really not concerned with that because before I did this video, while I was doing this live, I actually had this set out to this because using that was the highest point at the time. It drops back down into the proper buy zone, right? So if you are a smart money trader or any kind of good trader, you want to trade off anything below the 61.8 level, right? So generally you want it to get lower in here, near like the 79 to 88.6. That's what you'll see the highest reactions, and when you do see those, they usually completely take off. But this one came down at a 62. Not bad. Shot back up, and then so since it actually came back up, we'll get down to the 4 hour, maybe even the hourly, and I'll show you that it did break market structure on. I guess you could say it broke market structure on itself. So this was the last high here, right? Came back down, hit the 62, and went higher. And basically it was right at the 127% mark, which is where we like to see things, right? 127%, the 150%, 162%, and then go on, 200, 227, 250, 262. Those are your extensions that you usually want to put your Fibonacci's at, because those are your targets that you want to set whenever you're looking to do something like this. Target set where you're going to aim for. Those are usually the extensions they will hit, and this one did hit the 127%. So if I had my druthers, I wouldn't actually have any druthers. Anyways, it wouldn't be there, it would be here. So we mapped it out the highest point so far. Even though if I was to try to put it here, it came back down to about 50%. But people do trade off the 50%. There's actually a person that makes a living trading off the 50% line. And generally 50% is a good pullback, a decent pullback. You'll usually see it, especially on an engulfing candle. There's a very large engulfing candle. You usually see it pull back about 50%. So now, here is what we have here. So if we go back to the daily, what I did do was I did note that over here we did have a daily order block. So what an order block is that it's the last would be depending on which way you're going. So this is a bullish daily order block. So that means it would be the last bearish candle before, bullish displacement. So these two candles definitely, especially the first candle, is the one you really want to see. If it overtakes or engulfs the candle next to it. If there's two candles that are green like that, and they're both engulfing that candle, they can engulf three of those candles, then that's how you know this is definitely an order block, right? So what is expected of an order block? Whenever price comes back down into that order block range, it's expected to be rejected. And as you can see, the one time it does get down here, boom, it's rejected automatically. Now there's also something else in there that we're going to talk about, but yeah, that got rejected automatically as soon as it touched it. So as you can see, this is one area to where I don't think it's probably going to get lower than, and I marked the lowest of the daily order block down here, because if it does get below that, then we got to start looking for lower areas, which would probably be here at the 2544 mark, or at the lowest place we've ever been, because that's where the lower level of liquidity is. But I do not think we have to worry about that. I think we're going to look for is I'm going to the hour now. We did talk about the 4. There's not a whole lot in the 4 that isn't in the hour that we can talk about, to be honest. So one of the things about this daily order block is that this is the top of it. Now, at the top of the daily order block, as you can see, we have a low here, right? Top of the daily order block is here. And then we have a higher low here, right? So the top of this, the last candle, that would be your highest candle, would be your mitigation block. This also acts as support and resistance, even though it is also the top of the order block. It is considered, resistance as well. Here, what I want to do is I want to get this text and I'm going to center it, because it's kind of getting in the way of what this came down to. So actually, whenever this came down, it didn't actually get down to that order block. What happened is that there was another order block right here. And again, it just has to be a candle that is overtaken by another, it's a bearish candle, right? And it gets overtaken by a bullish candle. That can be an order block. That's all it takes. You can see the top of it is very well respected by all of the candles, going from that point forward. There's a couple that dip down into there, one that gets actually to the body of it. But other than that, this candle is definitely respected, and this is, another version of an order block. So it doesn't have to necessarily get down to the mitigation block, it just needs to get down to the order block. So as this is moving up, there are some fair value gaps in between here and there. As you can see, they're taking, and I can tell by the daily and the weekly, they're going to get taken care of right away, and just balance out. And once they balance out, they turn around. This is another order block right here. As you can see, price dips down into it, rejects it. That's exactly what's expected from an order block. So now that's moved up. We get to, and here we go. And here's the opposite of a mitigation block. We have a low, a high, and then a lower low, right? So the last up close candle is going to be your breaker, right? So and the breaker is the end all be all. I wouldn't say the end all be all, but it trumps everything. It trumps an order block. It trumps a fair value gap. It it is the one thing that is going to be difficult to get across as if it's acting as resistance as it is now. It's going to be very difficult to get across, even though you can fill it up, and it be balanced. It's going to be hard for it to actually get through there. That's why they call it a breaker. No, actually, I really don't know why that's why they call it a breaker, but I do know that these are very, very tough to break through. So we do have that breaker up here. The bottom of it's around 43. And the top of it is around 44. So in between 43 and 44, you have a breaker. That's the area it's going to be to look for to see if we can break out of that. Okay. Now, as we keep moving forward, there is a fair value gap that was also created in between 37 and 39. And if you move forward, you can see it come down, respected it, jump back out, but then also went straight through once it did respect it. So now we are balanced with that area, and I can actually probably pull this back, and show that we did. But it did create another fair value gap pretty much, and it's almost the exact same thing. It's just that this one went a little bit higher, so I can probably do something like, here, I'll just go to this one and we'll just create a new fair value gap. There we go. And move that one forward. How about that? Okay, so now as we're moving down, we have a low, a high, and a lower low. So now we have what? Another breaker. Again, as you can see, as it does move up into this area, boom, breaker, doesn't break through it. Boom, breaker, doesn't break through it. Boom, it's trying, but it just can't do it because there's a breaker sitting right here, right? So this is one of those things that I try to teach other than just fair value gaps, because if I'd have just taught you fair value gaps, you'd be wondering, well, why is it stopping right here? Well, now I have to teach you why about breakers, right? So here's your breaker right here. And this is what is keeping this price from getting back up. Now, if we get down to the dirty, the nitty gritty, the deep down south crab boil type stuff, down home backyard partying, we're definitely not talking about this, that's for sure. But if that's what we're going to get down into, we in the 5-minute zone, right, in the 5-minute time frame, we do have a fair value gap, right, that is run all the way across. It is just now broken down and actually completely fulfilled that 5-minute fair value gap, right? So now that is balanced, right, and it's taking its time, but it's trying to figure out which way it wants to go. There is another fair value gap just below it. I was thinking it was going to come below and touch this fair value gap and then easily rock it up, right? And there was an order block just before that, right? And as you can see, it had respected it multiple times. And let me actually change the style on this order block. That way we can differentiate it from the rest of them. And we'll do it like that. Okay. So here's the order block. You can see it dips down into it, comes back out, hits the breaker, comes back down, order block, it jumps back out. And now this time when it hits the order block, it does jump back out, but then it just pushes through and goes straight for, fulfilling the entire, fair value gap that's just below it. And we haven't touched this fair value gap that was created just below that one. So where are we at now with Solana? Hopefully we're on our way up. That's what I would expect, especially if we have filled this. And now we just gotta have to wait and see, what we're going to be doing. But I would expect us to be going up. All these breakers, they generally, whenever a breaker gets broken, it gets there. It looks like a rocket went straight through it. I mean, it just shoots right through it, and there's no resistance. And then it'll turn around and use that as support. So what you would see is something more along the lines, especially if we get through these breakers. What I would expect to see, if we're doing this, it shoot right above it, probably hit this fair value gap, come down, use this as support, and then it'll fight and fight and fight and fight and fight through this fair value gap, and then probably do the same thing, to this one. Maybe hit it, turn around, come back at the fair value gap, and then turn around and shoot way back up, to get through that breaker. Because what I think price is ultimately going for is this liquidity area right up here. Now, this liquidity area is sitting at 44.2, right? So that is where I think is where we're aiming for, is 44.2, because that is where we have two separate, basically highs, two sets of highs. There is a low in between both of those, but this would be the area to where, as a retail trader, you would be taught to short. Why? Because it's been shorted twice, right? You would get near it, you might as well start shorting it. What would technically happen, especially as a smart money trader, could get close to it. It is a breaker, so one thing that would probably definitely happen is it could go straight through it. But I'm gonna go through the most possible scenario is it, goes through, almost to the top of it, right? And then those sell limits are triggered, right? So then it pulls back down, and then it stops somewhere just randomly along the way. Or of course, there's probably gonna be something that could, affect it from over here. And then it goes up through here and actually breaks that 44.2. Now that's where the buy stops start. All right, people put buy stops here so they can try to catch a breakout, right? So the buy stops get triggered. More liquidity is released. So now you have the sell limit liquidity released into it. And now that it's went the opposite way against them, they've probably tried to sell and buy to go, just to chase it. And now the buy stops have been triggered. It gets a little bit higher, then it pulls back. And what does it do? It finds their stop losses, right? So it'll find these guys' stop losses, take these guys out. And then now the people who were selling short in the first place are selling short again, trying to chase it. And then it turns around and it goes the opposite way. That is typically what happens whenever you see a clear liquidity sign, or liquidity line, I should say. That is technically what happens. Generally, what happens, I should say, not always, but to the biggest point that I can think of, that is what usually almost always happens every time. What could also happen is it could just shoot right through it, trigger the sell stops, pull back, take them out with their stop limits, or their stop losses, I should say, and then just go straight through it from there. Or it could actually help out. I mean, don't get me wrong. Smart money isn't always about trying to take the opposite end's money. They do let the opposite end win sometimes, right? Just so they can keep playing the game. It's like when Jordan Peterson discovered that you put a large rat, in a cage with a small rat. The larger rat, will actually have to let the smaller rat win 30% of the time, or else he won't play, right? So we're just like that kind of mice. If we don't win a specific amount, amount of times, we'll stop playing, right? So they got to let us win sometimes. So maybe it just goes straight through and the buy stop people win, right? That's definitely possible. Or what could happen is that we could see one more time to where, um, it does actually hit the top of the breaker, and then it does fall for quite some time, and then, lets those people win before it actually turns around and goes the opposite way and then does something. So it all just depends. There could be multiple things, but I'm just saying watch around the 44 mark. Watch and see what happens around the 44 mark. Don't I'm going to say don't even try to play it. I wouldn't play it until you know for a fact what's going on. I'm not going to try to play that area, that's for sure. If anything, I'm going to try to set up a long way down here, probably like right now, and then hope it gets to that point. Because it is at 35, and getting in now before it gets to 44, that would be a nice play. So, anyways, now that we know what's going on with Solana, hopefully you do too. Hopefully you can see, what's going on, how to, trace things a little bit better. Now that you know what a breaker and a mitigation is, and watch out for these breakers because they do mean a lot. And I just proved it to you. Low, high, lower, low. The high in that area is your breaker, and be careful with what comes inside of it because it's going to get rejected until it goes straight through it. And then once it goes straight through it, then it acts as support instead of resistance. So like I said, it could go straight through this fair value gap, bounce back down, hits this as support, then pushes through this fair value gap to balance everything out. And then you got another breaker, could hit it, pull back at the fair value gap, and push on through. That's what I think is going to happen until we get to this 44. Anyways, that is all for me. It has been 30 minutes, and I think I explained quite a lot and that I could for this amount of time. So I just want to thank you all for listening, and thank you all for being here and watching my channel. It actually means a lot to me. If you can, help me support my Patreon. It's only $3 a month. I'm not asking for a lot. I'm just asking for a little bit. If as many people as they can, pitch in $3, it could help me a lot with all the expenses. That helps me, just to produce these videos. So looking to becoming my Patreon down below. Follow me on my socials. Join all my referrals. All my stuff should be down below in the description. If not, you can reach out to me. I think my email is available. My Telegram's available. So my trading view's available. So you can send me a message on trading view if you want. All that stuff is there. So whatever you can, whatever you want to do, if you want to hit me up, if you got an idea, if you're a technical trader and you want to do a face-to-face, something like that, and talk about a specific commodity or a specific, asset, we can do that. I don't care. I'm up for anything. I just want to talk about smart money and how it's affecting crypto and how you yourself can prepare for these things. That way you're not caught in the dark with your pants down thinking that you've got this because you've been taught some kind of, weird retail theory thing, or, like this is a triangle and that it's going to break out because of whatever. That's just not how things work. And I just want you to let you know that's not how things work. Because I genuinely like to help people. So that's why I thank you for watching my channel. And if you can, please support it as much as you can. Share it with people if you'd like to. Who are into trading, who, if they may not understand technical analysis, this may help them. Whatever you guys can do would be superiorly grateful. I would thank you from the bottom of my heart. I truly do. So thanks again, and I will definitely see you guys on the next video. Let me, if you want to, shoot me, comment something if you want me to do a specific asset. I want to do Pirate Chain. I really do. I think Pirate Chain is extremely interesting. It's basically the next Monero, but it's a very very early adoption. There's not a whole lot of history to it, so kind of hard to do something like that. But I'll always be doing a Bitcoin one or a Ethereum one just because they're always changing. Other than that, I'll be finding other assets to do as well. But Solana, I definitely have truth, and a lot of people have invested in. It's going to be very very useful to the ecosystem that is cryptocurrency. So we'll see what I got coming up next. Maybe Live Peer, maybe Hydra. Who knows? We'll just see what happens. How about that? Again, thanks for watching. Spread the word, and always remember to wear your pants.